make it. We gonna 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 make it. We. Hey, what's up, people? It's your boy Traded Diet tonight. We're doing a continuation of last night podcast. Well, episode 9, I think now, and we're on our 10th one. Man, I'm 10 in. Wow, that was fast. That was quick. All right, yeah, we talking about forex. What is a continuation? The forex market or foreign exchange. It's a worldwide financial market for trading currencies. So as we discussed last night, when you trade forex, it's actually a pair. You're actually buying one, you're selling one, or you're selling one and you're buying one, depending on the position that you take. So as we discussed, that you have one currency is the base currency, and the other one is the quote currency. And the number that you see, which means that the quote currency is the number of the base currency. Like for instance, let me go to my we discussed last night. So with the euro dollar, that is the base currency. That is the quote currency. So it means that 1 euro equals 1.115 United States dollar. So also, as I discussed last night, there's a spread. If you notice, this is the buy price, that's the sell price. You may ask why those two prices aren't the same. That's because, as I spoke yesterday, there's always a difference between the bid. I'm sorry, the spread, the bid price and the ask price. That's how the forex broker gets paid. Like there is no commission on forex. Now, stocks nowadays, I guess a bunch of stock companies becoming no commission. That's their big gimmick. But forex, there is no commission at all. But that's how you. So every trade that you start in forex, you're always going to be in the red before, because of the fact that you have to pay the spread. So I think when people trade forex, they sometimes they get scared. Like, oh man, so they trade, they're praising the red. I wouldn't really worry about that. That's just the spread. All right, and this actually leads us into our example of tonight. What is a pip? All right, so when people speak of a pip in forex, they're referring to how the profit is measured. See, the pip is the fourth spot to the right of the decimal point, as we see here. You remember how it was in math class? That's the 10th, the 100th, the 1,000th, the 100,000th. So the pip is the fourth spot over from the decimal point. See, the forex market moves so fast that they had to make it that far over, because if it's just too much there, it's too much buying and selling in forex. Like we always say on TRADEoRDIE, what's the word, people? Liquidity. That's the word of the night. Actually, that's the word forever. So the pip is always going to be this spot for all currency pairs with the United States dollar. Only one that won't be this way for it is the Japanese yen, because the yen has like low value. So as we see on the other screen share. Yeah, see, and the yen, like the exchange rate is like 127 yen to $1, I think. I'm not really off the top of my head, but that's the only one. I actually don't have the screen share. Well, yeah, it's that's the only one is the Japanese yen. But other than that, every other currency with the United States as the base dollar. Yeah, so like a pip is actually an acronym. It stands for point and percentage, and that's the smallest movement of a currency of the currency movement. So now the pip leads us into the next thing I want to talk about is the lot size. See, when you understand forex, the pip size and the lot size is kind of like buying shares and stocks, but it's not really the same. But because like stocks, you're buying shares or ownership into a specific company, whereas in forex, you're kind of like investing in a specific country's economy. You're not really buying specific shares, because you can't buy shares in China or Japan or you really can't. So that's impossible to measure in shares. So which leads us to like lots. Now, a lot is so we're gonna, as I always say on Trader or Die, every time frame or every currency or whatever I say is always based off our United States dollar. So the lot is actually 1,000 USD. That So when you understand Forex and you understand the lots and the pips, then you understand your risk reward and how you want to take your profit and how you want to make your trades. So most brokers, they start with the smallest lots. These lots are called my micro lots. Now, like I said before, one micro lot is 1,000 United States dollars. Now for that movement, a pip is only 10 cents. Now, yeah, Sean, yeah, USD. Now, a pip, as we go back to the screen share here, let me go back. Okay, right here, I see like a lot. See, the nano lots, that's something very new, but most brokers don't really offer nano lots because they're extremely small. That's too small. Like right here, the micro lot, that's 1,000 units. So that means that 1,000 units divided by 10,000.0001. It's gonna come out. I'm sorry, times, not divided. It had to be a million. Multiply it to come out to point 0.1, which is 10 cents. Now, for those lots, that's the best one. That's the best trader. That's the best type of account to open for a new trader because you can trade with real money, but your risk is so small that it's not really, you won't feel the any any losses or anything. Man, I get nervous on the camera, man. But yeah, so like I was saying, those small lots are very good for a new trader. Now, if you trade and you feel like you want to step up in competition, then we see here that is like a step up in competition. The mini lots. Now, the mini lots is 10,000 US dollars, which transforms out to $1 a pip. Now, as we've talked about Forex all the time, Forex has extreme liquidity. So it's nothing for is to see a movement of 100 pips in like an hour of Forex. You can see 100 pips actually all day long. So down here when it was only 10 cents a pip, that 100 pips really isn't nothing. You can really take that. And you come up here to the other lot size, that 100 movement, that now becomes $100 movements all day long. So you got to think the Forex is not for the weak. Now we go up to the other lots. These are the standard lots. These are the big boy lots. That's $100,000 standard size lot. If you multiply that by 0.0001, it comes out to $10 pip. Now you got to understand, Forex is not for the weak. If you cannot understand take trades, as you see here, as we said before, the spread is always paid when you make your trade. So if you own a standard account size, as soon as you make your trade, you're already down $10 in the hole. So if it goes up to, then it's 20, then it's 30, then it's 40. Like Forex is not for the weak, like I say. So if it's 100 point swing, 100 pip swing, that $10 then becomes $1,000 movements. So, but the thing for standard lots, that's for mostly institutional, like big banks actually, or guys that got deep pockets. But it's mostly for big banks or the Fidelities, J.P. Morgans, my favorite, Ameritrade. See, but most stockbroker companies, they really didn't offer Forex until the last couple of years because they saw how profitable Forex is. But I stress this to people, especially all new traders. Wherever there's a chance for great profit, there's a chance for great loss. And I think people need to understand that whenever they trade Forex because they see it's money to be made, but it's also money to be lost. So, my next episode we're going to talk about most likely technical analysis. That's a great segue, because to be a good forex trader, I think you need technical analysis. But people, I have a guest tonight. This guy's a great forex trader. He can actually, he's a great trader. Actually, he can talk more than me. That's my guy here, my man L Modern Trades. He's a great trader. His own show. So, hey L, let me talk to him for a minute.
What is going on, y'all? What is going on? Now, you guys saw that he covered a lot of stuff. He covered like a lot of basic stuff when it comes to trading. The stuff that I'm going to talk about actually is kind of basic stuff too, but also kind of advanced. I'm talking about the mindset of a trader and the mindset of trading. I feel like, I talked to my team a whole lot this week about trading and why people always lean towards stocks for. And this is why people lean towards stocks. This is literally all people usually know. People never heard of Forex in their life. People never heard of crypto unless they heard of Bitcoin. So when it comes to stocks, they're like, oh, I heard of stocks. I heard stocks can make you rich. That's all they heard. So people will always send me a message and ask me this question. Hey, what's the best stock to get in right now? And I always answer back, I don't know. I don't trade stocks. I always say that. But people associate seeing a chart with stocks. And so I'm like, I don't trade stocks. I don't know. But I kind of found out why people want to trade stocks so bad. This is what people want. People want to buy something and hold it and hope that price goes up. So they're hoping that they can be the next Tesla or the next Uber. They want to get in on this like
Warren Buffett.
and hope that it blows up. That's what they're hoping for. They're hoping that price goes from low to real high. That's all people know is the main thing anybody going to tell you. I can assure you this. People always say this. Well, I know about trading. You buy low and sell high, right? People always say that. Like that's like the basic go-to thing. Like I said, people lean towards stocks because they're hoping that they can buy. They're buying and holding, hoping that price goes up. That's it. There's no skill involved in it. And I tell people, go ahead.
Now, I was just saying, I would agree on your first topic. Why people they never heard of the forex market. That's another reason.
Never heard of it. They never heard of it, man. And I myself honestly never heard of it until 2016 when I was approached with it. And the guy told me, yeah, man, I'm doing this thing from my phone, making money from my phone and my laptop. I'm like, what? That sounds like some BS, especially in 2016. If someone said they're making money from their laptop and their phone, you're going to be like, man, that don't even sound right to me. And so when I heard that, I was like, man, I'll think about it. Didn't think twice about it at all. And yes, someone in the comments said he likes to diversify. It's always good to diversify. Always good to diversify because you never want to put all your eggs in one basket. And this is why, again, there's nothing wrong with trading stocks. People tell me all the time, hey, I trade, I use Robinhood, or hey, I trade, I use Acorn. I'll tell you a secret. You ain't really trading. Again, you're buying and holding and hoping. You're making money when price goes in one direction. You want to make money when price goes in both directions. That's why I trade for, because I can make money when price goes up or price goes down. Same thing with cryptocurrencies. I can trade indices also. So if price goes up or price goes down, I make money in both ways. It's not just me holding and actually hoping for price to go up. I ain't hoping. I tell people too, if you're trading on so-called trading on Acorn or on Robinhood, the thing is, can you duplicate what happened again? That's the main thing when it comes to buying a stock and hoping to blow up. If you can't duplicate that, how can you then say you're doing it? You just got lucky, kind of. So, for instance, people who got into Bitcoin early, what makes it a good trader? More winning than losing. And if you lose more than you win, let me tell you a secret. It actually doesn't make you a good trader. What makes a good trader is not more winning than losing. Proper risk management in winning and losing. If you're risking 2% of your account and you're expecting to get back, 10% of your account in the win, you can keep on losing 2% of your account over and over and over. And then that 110% can make it for those 5 losses. Just that quick. So the problem people always run into when they come to trading is they over leverage their account all the time because everyone wants to get rich overnight. People be over leveraging like crazy. It always happens. Go ahead, bro.
It was so bad on Forex.com. They changed the leverage from 500. See, I started like you said, 2008. When I started, it was 500 to 1. Now it's knocked down to, I think, 50 to 1 or something. They added because people was just ODing on the leverage. It was like crazy, hard.
Man. And this is why the mindset of trading is so funny and so important, man, because people will win. And then they'd be like, you know what? I'm doing good at this. Let me go stupid big. Let me over leverage my account and remember this whole thing on one trade. And that'd be the one time they lose. Now their whole account gone. Like just that quick. People do that all the time. And this is, and Tanisha said stocks are set up for long-term investment, not trading. See, you would think that, right? But you can long-term invest Forex trading too. You can swing trade Forex. You can swing trade anything. Like I trade a thing called harmonics. Harmonics are, you find patterns in the market And the patterns repeat themselves over and over and over. And they transcend time. No, not like Neil deGrasse Tyson, but they transcend time because you can find a harmonic pattern on any time frame, from the 1 minute to the 1 second to the 1 hour to the daily to the weekly. Harmonic patterns on everything. So if I see a really big pattern happening, all I have to do is hold. Go ahead.
Now, I just want to say, people, this is technical analysis. This is what hey L, you all right, so L's gonna be on our next podcast with technical analysis. This is what basically a great segue. I'm sorry, but
I'm not going too advanced, but I'm just talking about the mindset of people who trade. And again, like you said, Tanisha said she thinks that stocks are for long-term investment. Let me tell you, if someone, let's say for instance, there's a guy I know works at Edward Jones. I'm not going to call his name, but do you guys know who Edward Jones is? You know who Edward Jones is, Harold? You know who Edward Jones is, right? They're like, so Edward Jones does people retirement. This dude told me that Edward Jones offers people 6 to 10% on their retirement a year. 6 to 10% a year, right? That to a person who does not trade, and you're doing long-term big numbers, that sounds good, right? But to me who trades, I told dude, I said, bro, I made 6% in the morning. Like I can make 6% in my sleep. Exactly. So you're telling me that it's going to take you a whole year to make 6% on an account? That by itself is crazy. But he said, this is the thing. People don't want to learn how to do it themselves. So if they give us their retirement in their hands and we do it for them, all it can take is what we give them. Same thing with banks. Banks are paying Forex traders 6 figures a year to trade for them. So you already know how the rules of money work. If someone's paying you 6 figures a year to trade for them, they're probably making buku money off of you. If they're paying you 6 figures just to do this, you know how much money they're probably making off someone who's. So I mean, like I said, you gotta it kind of expand your mind when you think about Forex trading, because honestly, the vast majority of people don't know about trading. The only time they ever hear about trading is if someone tells them about that, or if they go to the airport and see the FX exchange in the airport. That's the only time they ever heard about it before. But it's a whole new world of money out there, and we can get ahead of how money moves. Like we definitely get ahead of how money moves. That's what we do. That's why we trade. That's why I trade for, because I saw the power that was there, and I told myself, this is gonna sound real corny when I say this, but I told myself, you know what? I'm not going to suck at this. Because if I'm going to do it, I'm going to do it. I'm going to be good at it. I'm not going to suck at trading. Because I came in there at first, I have no strategy. I have no plans. I have no nothing. No, nothing. I was just in the markets hoping. I was at that point buying, holding, and hoping. I was like, man, why I keep losing these trades for? It's because I did not know what I was doing. I was in the markets. I was lost. I was in there though, but I was lost. But my foot was in the door. So I told myself I wasn't going to suck. So I actually found a strategy that worked for me, and I stuck with it, and I tried to perfect it. And the thing about trading too, man, this can be a long-term thing. This can be a short-term thing. I have friends who trade, and what they do is they have their long-term account, and then they have their short-term account. They have their account where they pay themselves at every week, and they have their account for retirement, and they keep that thing going, When you have your account for retirement, you're not in that account every single day. You're not touching that account every single month. Let that thing ride, because you can swing trade this too. Because again, when you're compounding your money, let that thing grow too. If you want to grow it slowly, you can grow it slowly. If you want to grow it fast and get aggressive, you can grow it fast. Trading gives you so much options, because even if you expect the US dollar to take a fall off a cliff, guess what? You can ride that fall down and make money. And then when it's going to turn around, you can ride the thing back up. Exactly. See, people think of trading like, remember Price is Right, the low yodeling man? He goes to the top of the mountain and it keeps on going, and then it finally falls off the little mountain. It's like, some Price is Right. This little guy that's yodeling, and then he falls off at the end.
Oh, yeah.
Yeah, like that. That's not what it is. Because what we do is, on that way up, we're making money. And when it falls off, guess what? We making money because we know that fall is coming. That's what we do. We get ahead of that move.
Technical analysis, people, price points.
Yeah,
You're gonna get that.
I'm not gonna get too deep into. I'm not even really talking about trading right now. I'm talking about the mindset of trading. So I haven't even gotten to the actual trading stuff yet, because your mindset on things, trading is going to teach you a lot about yourself. It's going to show you if you're aggressive. It's going to show you if you're impatient. It's going to show you if you want your money now. It's going to show you if you're planning for the future. It's going to show you if you're trading with desperation. It's going to show you if you're trading with revenge. All that stuff is, you're going to learn yourself about trading. Like, all that stuff is there. People revenge trade all the time and lose money. I hear people always say, I tried that Forex thing years ago, or I tried this Forex thing last month. It didn't work for me. If you try Forex for 30 days, if you try trading for 30 days, you ain't really try trading. Like, you put your toe in the water, you didn't go swimming. Like, you was there, but you wasn't really there. It's definitely psychological. because you're gonna learn about yourself when it comes to your money. Some people get real aggressive with their money. They want their money to grow as fast as possible. That's people like do quick fixes because they want their money to grow as fast as possible. Other people are gonna be like, you know what? I'll let this ride. I'll get trade on Friday. People be like, I'll get this trade today and get out on Friday. Some people like that. Some people are like, nope. Right now, 1 hour, I'm out this trade. 1 hour, I'm out this trade. If you have a goal and your goal is to hit, say, you want to bring your account 10% a day, 10% that day, stop trading. But the aggressive person is like, all right, I'm at 95%. I need this 10. And they'll go back and lose the whole 9% trying to get that 1%, that 0.5%. People do that. It's all about your psychology and your mentality when it comes to trading. But keep our mind. Exactly. It's just numbers. There should be no emotion in trading, honestly. It's more about your knowledge than it is about, what you think gonna happen. It's not about what you think, it's about what you know. And you know from your analysis, from the stuff you've learned from your studying, not what you think or not what you hope. That's what I'm looking for. It's not what you hope gonna happen. It's what you know gonna happen. My bad. It's a lot of talking I did just now. But again, y'all gonna learn yourself in these markets, man. If y'all are here on this podcast right now, y'all are in the right spot. Y'all surrounded around the right people who gonna help you, get to where you want to go at. But what you have to do definitely is know when you learn the skill, use what you learn in the skill to not freak out. People be like, "Oh, I'm bad test takers." People always say that. I'm a bad test taker. So everything you've studied this whole time is for this test. Now you're gonna fail the test because you're a bad test taker? No, pass the test. Exactly.
Everybody, that's your money.
When it's go time, it's time to go. Like that's like, I used to play football. It's like you going and playing and practicing all summer, 2 days, all this stuff. And now it's game time. You forget your position. It's not going to happen. That's what you train for. Like that's what you're here for. So take the emotion out of it and do what you're supposed to do. I can assure you, every time somebody misses their assignment on the football field, it's because they was thinking of, oh, but I got emotional. I blocked the wrong person or I grabbed the wrong person. But you know what you're supposed to do already. The same thing happens here in trading. You know what you're supposed to do. Don't let your emotions be like, oh, I think I should do this, because that's not where it's at. That goes to a lot of things in life, but definitely with trading, because being disciplined in trading and being consistent in trading is going to take you a real long way. It really separates people who aren't good at trading, who are good at trading. I'm a financial analyst, so I'm interested to see if my skills would transfer to this. I don't know exactly what skills you have to do that job position, but it probably will. If you go with numbers, people think all the time also. People say, I'm not good with math. I'm not good at numbers. I'm not good at this or that. I'm not good at multiplication. None of that actually matters if you're good at pattern recognition, because money repeats itself over and over and over. And that's how you get a strategy, because you know what's coming once this move happens. Go ahead.
It's cool. I just hate when I always hear that they say that past performance don't predict future results. But it's the past emotions, fear, greed. You know what I mean? People are thinking like that since forever. So people gonna think like that in the future. So that, as you said, it's gonna be constant cycles in the market. They're gonna repeat themselves. They're gonna know.
What's funny, man? People always say that, past results don't prepare you for future, whatever they say. I'm talking about. You say it too. Both of them say it don't matter. But people always say that. But one thing I always emphasize on my sessions and on my class is that when you go to the left of a chart, the left is showing you the past. If your analysis is on point, you will look to the past and see that your place you're buying was a place where price was bought before, a strong place where price was bought before, because price repeats itself over and over and over. So even though they say, the past won't tell you the future, it can show you what's going to go at. It can show you what the future can possibly do. I'm not saying we don't predict the future in the markets, but we get dang near close to it, because you can see what happened in the past. It's going to show you the future.
Technical analysis. That's why we day trade people.
Exactly.
Like, it's a big thing, as he said, the psychological levels. Like, for instance, like on the chart. All right, we're gonna get one thing about support and resistance. Like, strong support on the chart is really strong. Once that support is breached, it becomes a strong resistance. Vice versa, and you know why that is? Because at that place on the chart, it was in every trader's mind that that was a strong price point. And once that price point got breached, it became a support price point or resistance price point. It depends on the direction of the trend, but it's all about psychological.
But what you're saying with that support and resistance thing, I don't care if someone wants to learn harmonics or harmonics only. I always teach support and resistance first because that's one of the
Yeah,
basic
yeah,
things you got to know if you're going to trade anything. You got to know
yeah,
support and resistance, and you got to know that
yeah.
once price breaks the point, it's going to come back to that point and then reject, or then come back and then make its move because it's kind of like
Flip-flops.
exactly. Think of that point like a magnet. And when you have two magnets, you get them real close. You want to, they're going to push away. When price gets back to that point again, it's going to push away. It's going to bounce up off that thing, man. That's what happens in the
That's where
market.
you make your entry exit points, people. That's when you get your
Exactly.
trading plan. That's when you start to formulate like for resistance. If you see like I'm just going on a number. If you see that the euro dollar every time it comes down to 1.114, like, well, wow, that's a strong point of resistance. I start putting a sell trade when it comes to 1.115 because every time I hit 114, it's gonna bounce back, or you can buy. That's how you make your trading plan around those price points.
Exactly.
That's a big part of
And that's how you know what's coming. And I'm bringing this all full circle real quick. And this is the problem with people who say, hey, I trade stocks on Robinhood or I trade stocks on Acorn. There's nothing wrong with using Robinhood or Acorn. I promise you, I'm not bashing those companies at all. But what I'm saying is if one of those stocks blow up and skyrocket, can you then duplicate that again? If you don't know why it blew up or what made it blow up, how can you say you're then trading stocks? You see what I'm saying? You have to know what makes something happen and why. In the Forex market, you literally can look at the chart and it's giving you all the answer. The answer key is there. You just have to dig into it, do a little not architecture. What's what I'm looking for? A little archaeology. Do a little digging, dust some of those old moves off, and you're gonna find out what's happening, what's gonna come in the future. That's everything comes full circle. Everything comes full circle, man. And again, like I said, that's why I trade harmonics because harmonics have a set of rules. I'm a design engineer. I'm a graphic designer. I'm big on my numbers, my shapes, my geometry, stuff like that. So when it comes to harmonics, they have a set of rules. I tell people if they don't fit your rules, don't take the trade. And again, that goes to your emotional state of mind, and that goes to you trusting your analysis more than a guess, more than your emotions. Because trading ain't emotional. There's bots that trade. Literally, there's bots that trade because bots don't have emotions. If something can follow its rules, you can be in that trade. That's basically what it is. Now, again, I've been talking a lot, and y'all know I can talk about this all night. But I ain't gonna talk about this all night. I'm not gonna keep your podcast going for too long, man. But
Yeah, man.
I'll be back again, though. I'll be back again, man, because
yes, he's gonna be back on.
I'm huge on the mindset.
Sorry?
I'm huge on trading mindset, man.
Yeah, so he's coming back when we start technical analysis, my good brother. We can just go back and forth on support and resistance.
Oh yeah,
Just discuss. That's for real. Honestly, I don't want to make it so simple, but if you understand basic support and resistance, you can probably just use price points and make a simple trading plan just off of knowing support and resistance. Actually,
he said no. You want me to go yet? I've been talking. Like I said, I told Harold before I got on here, man. I said a lot of stuff I'm gonna say. It's gonna go with trading, but it's also gonna go with just stuff in regular life. Cause you go in these markets, you're gonna find out who you are. You're gonna find out if you see the gray hairs in my beard, they ain't came until I started trading. Because I had to find out who I was in these markets. And at first, I was lost in the sauce, and I told myself I'm not gonna suck at this. I've seen guys winning all around me. I don't care if it was on demo. I don't care if it was on a real account. People were winning around me. I'm like, man, how do people know what's coming? I'm like, dang, they must know something I don't know. And if they know something I don't know, that means I need to go know it. That's basically what it was. Some people will see that information and be like, dang, this person knows something I don't. This person knows something I don't know. And they'd be like, well, I guess I'm not good at this. Some people will doubt themselves that much to say, I guess I'm not good at this. But a person like me who has that go-getter mindset, and yeah, I'm not going to quit on it. I'm not going to quit on myself. I'm not going to quit on my team. So what I say is, if someone knows something I don't know about trading, I'm going to find out what they know so I can utilize that too. Why not? I'm forever a student. Be forever a student when it comes to something like this because, the markets are always changing. Your mindset is always changing. If you're in the same spot you were in 5 years ago, that means you ain't growing. And things that don't grow,
you lost.
Exactly. Things that don't grow, things that don't evolve, they die. That's what happens. They don't evolve.
And that's why we call trade or die, baby. Trade or die. You gotta evolve.
Things that don't grow, things don't evolve, they die, man. That's basically what happens. So even in these markets, you might feel like, dang, my strategy is perfect. Even right now, again, I'm going back to harmonics one more time. You can have the best strategy and still perfect it. You can have the best strategy and still learn another one to put with your strategy to give you even better entries. There's always something more you can be learning. Because once you feel like you know everything, you're already starting to lose already. You should never feel like I know everything about trading. Never. what they say
I've
on
been trading
Sandlot,
since
you'll be learning forever. Like I said,
forever,
forever.
forever.
You're gonna be learning how to do this thing, man, because that's how it works. And I pride myself on being forever a student and being a glutton for knowledge. Because if I'm gonna do it, I'm gonna go all in on it. And I advise
Yeah, I
you guys.
agree, man.
I'm on Instagram live too right now, looking at myself. So I'm over here looking to the left. Well, it's backwards on me, so I'm looking to the left. But yeah, I'm on Instagram live too. So like I said, I'm not gonna go into too much, even trading stuff, but just you gotta know yourself to be in these markets. If you don't know yourself, you're gonna be lost. If you don't come in with a plan, you're gonna be trading for no reason. You all know everything. If you want to finish something, you gotta have a plan. You gotta have a goal. If you don't have a goal, how do you know when you're finished? How do you know when you reach your mark?
That's a big thing in the Forex market. I think that was a great segue that I was thinking. Like there's like the Forex market moves so fast. You're like, man, I can get all these pips. I would advise you to stick to try to get 15 to 20 pips a day. That's a great way to even 25 to 30. And if you get that in your head every day, then you can formulate a plan. So I can get my 15 pips here. You start to formulate ways around your price points. But as my man Elmo just explained, it's very great. It's like it would behoove you to have a trading plan. It would, because if not, you're
Exactly.
just paying. All you're doing is paying the forex broker. Whether I'm sorry, I wanted to talk about some forex brokers. So really quick, L, can you give them some forex brokers? Just so they
So
can go research.
when I first started, I started using I started using FX Choice, and then I went to Trader's Way. I got away from Trader's Way because Trader's Way didn't have as many pairs as I wanted. I started wanting to trade Bitcoin and US 30. I ain't gonna talk about US 30 right now, but US 30, I ain't gonna go into US 30, but US 30 will make or break you and definitely test you. And it's been making me a lot, not breaking me a lot. But before I go about brokers one more time, I promise you guys, if you guys decide you want to learn to trade Forex, you will then be able to trade indices. You'll be able to trade crypto. You'll be able to trade stocks because a lot of these markets, they have similar movements, except Forex is more volatile.
Correlations. As I said before, when you use the technical analysis, you can then supply them to every market because, as he just said,
Exactly.
price
Exactly.
points like support and resistance goes through every market. But as we both keep constantly saying, the Forex is so extreme liquidity, which is a great word here. The technical price points are more extreme because the movements are more extreme. But as we say, futures, commodities, crypto, stocks, it's
It's all the same ballpark.
it's yeah, it's all the same ballpark. Then that's when you start to learn correlations. When like how the numbers when I move, you move, just like that.
Exactly.
Some numbers they move together, some numbers they move opposite. Once you learn the correlations and things like that, you'll understand. Like I don't ever want to say trading is easy. I always say basically people you're buying or you're selling. That's it. So when you start doing your technical analysis, you're just increasing the odds because there's two choices off back 50%. Once you start doing your trading plans and this and that, you're increasing your odds from 50 to 60 to 75. And that's basically what you want to do. As El just said, if you set a trading plan, you don't take the trade unless it fits the exact parameters of that trade.
Exactly.
Basically,
Exactly. Oh yeah. So one more thing on the broker. The broker I use now is not Hugo's Way. I don't get a kickback for announcing them or nothing like that. But I use Hugo's Way so much because Hugo's Way, they have a lot of pairs, they have indices, they have their spreads ain't bad, and they're pretty easy to use, man. They're pretty smooth with everything. I can't think of the words I want to say. I can't make it sound smart. They're just pretty good. So that's why I use them for. And I know for every broker you say is good, someone will be like, man, that broker sucks. It's always a person going to say that. It's
yeah,
guaranteed. That's just how the world works.
it's thousands of brokers, literally. Like
Exactly.
some of the brokers he just named, I never heard of. You always use Forex.com, FXCM, and Oanda. And listen, L, you ever heard of Prime XBT? That is a forex exchange, but the default crypto, the default currency is Bitcoin. So all the trades are measured in Bitcoin. So it's kind of good whenever Bitcoin goes up, your
Mhm.
balance goes up. Just it's like
It's
having
actually
a
pretty cool.
Bitcoin wallet. Yeah, but it's not really a wallet, but it is because you know Bitcoin is the
You know what's
default
funny about
currency.
that? we talk about the psychology of trading. I had a team member who she was losing trades because she kept on watching the amount of money she was making or losing. So what she did was she changed her natural currency and her broker to Bitcoin. So where all it would show was bit. So you would see your bit was blue or your bit was red. That's it. She don't know how much she made, she don't know how much she lost, but she had it set to amount of pips. So she knows she wouldn't have lost that trade, but she ended up getting way more wins than her losses because at that point she wasn't checking the numbers. She was just checking for red or blue. Red or blue, that was it.
That's how Tanisha is Prime XBT. PRIME XBT. That's the it's like a foreign exchange, but it's measured in Bitcoin. That's like a 2-for-1, especially with this. I don't want to divulge, but they just had the half. You know the Bitcoin halving was last week or like a couple weeks ago. That's expected to jumpstart this crypto market. Oh,
I mean,
don't even worry. We're gonna get into Bitcoin. I don't want to give him too much because hey, we've been on for like 35 minutes. Hey, tune in for the next podcast.
I've been talking too much, man. I've been talking way too much.
So, hey, brother, man, people was learning, and that's what we do here at Trade or Die, baby. We learn because we telling people. I don't understand Bitcoin. Yeah, don't worry.
Yeah, they'll get it. They'll get it. It's coming. It's coming.
All right, people. It's your boy Trade or Die. Hey, it's a Wednesday night. No, tonight. Oh, it's Thursday night.
Thursday. It's a Thursday.
Oh, so tomorrow, are you free tomorrow? No. Yeah.
What time? What time?
Hey, the same bat time, baby. Same bat place. 8:05.
You know, I might be in here tomorrow. I'll let you know for sure tomorrow, man. I'll let you know for sure tomorrow.
All right, people. So, we're gonna start technical analysis. I think technical analysis is great. As we said before, technical analysis goes through any market. So once you learn your technical analysis, like we both say, you should be able to stare at the chart and say, okay, I can see that. You'll start seeing just price points, buy, sell points, entry, exit points. Now, it's not going to happen overnight. As they say, practice makes perfect. And on that note, people, we're going to make it. We'll see y'all tomorrow night, 8:05.
You guys, make sure you guys follow me too, man. My Facebook is L Modern Trades. My Instagram is L Modern Trades. My YouTube channel is L Modern Trades. It's in the bottom corner of the screen right now. Everything's L Modern Trades. Literally everything's L Modern Trades. If you search L Modern Trades, I'm gonna pop up somewhere on you. So just I'm on every social media except Twitter. I don't have one. But y'all be good, man. I'll see y'all tomorrow. I will see y'all tomorrow, possibly.
He gonna be there. He gonna be there. Be square, people. All right, people. Holla.